Hello, how are we doing today? Hope we had a good week. How we doing? All right, welcome to today's class. Um, okay, let's take a little bit of a while and share. Um, yeah, all right. As you know, my name is Samuel Oduma, and I'm a forex trader. Okay. In today's class, we'll be taking the second introduction of the financial market today. Okay, I believe we took the first one last last Saturday, right? Yeah. Okay. So we're taking the second class today. All right. I can see somebody now. Please, can you drop me a comment? Let me see you drop your comment so that I can read that out. Just your name and where you are watching from. Your name and where you're watching from, okay? Just your name and where you're watching from. Let's see if I can get that. Okay. Today's video is going to be very short one. It's going to be very, very, very short. Okay. Um, Today we'll be dealing on types of traders. Okay, types of traders in the financial market, and in this context, the forex market. So, types of traders in the forex market. Let's go. We have the long-term traders, and we also have the short-term traders. The long-term traders are traders that hold their position for a long period of time, and then the short-term traders are traders that hold their position for a short period of time. All right. Under the long-term traders, we have the position trader. These kind of traders are traders that hold their position for a long time. Their target is from 1,000 to 10,000 pips out per trade or more. So when they enter a particular trade, they target 1,000 to 10,000 pips from one single trade. And these guys can hold their trade for weeks, for months, even years. Depends on what they are seeing in the financial market at that particular time. All right. Their chart analysis is done on daily, weekly, monthly, 3 months, and yearly chart. So they make do of the yearly chart, they make do of the 3 months chart, they make do of the monthly chart, the weekly chart, and the daily chart. Okay. We have under long term also, we have the swing traders. This kind of trader hold their position for long, but not as long as the position traders. They only take their trade from one swing to another swing. Get 200 to 2,000 pips per trade, depending on the time they are looking at. Okay, so they enter from a swing to another swing. Their duration is mainly weeks, months. Some of them use the daily chart too. It just depends on the kind of swing that they are looking at. All right. We have trader under the kind of trader they are grouped in between day trading and swing traders. Their target is just 50 to 500 trades per pips per trade. The duration they open the trade for is to 1 week, 2 weeks, they are done. And their chart analysis is from 1 hour, 2 hour to the daily chart. Okay, intraday traders, they just leave their trade over to another that same day. Okay, that's day traders. They close their trade, enter their trade, and close it that same day. They target 50 to 30, 50 to 100 pips. They are done. Their trade is just within a day. They open and close that same day. They are done. And then we have the scalpers. These guys are a set of traders that enter and exit the market very quickly. Some of them target 5 to 50 pips. They're done. They trade ticks, seconds, and then minutes of the time frame. Their chart analysis is mainly done on the 5 minutes, 15 minutes, highest on the 1 hour time frame. Okay, and then they are done. Okay, those are type of traders we have. Let's consider factors to consider before deciding what kind of trader you should be. I think we'll take this and then we'll be through for today. Factors you should consider before deciding what kind of trader you should be. Number one, the amount of currency pair you want to trade. Okay, if you want to be a short-term trader, don't trade more than 3 currency pairs. Okay, what this is means is that if you want to be trading as a scalper or a day trader, you shouldn't trade too much pairs. In my suggestion, you should trade the majors: Euro USD, GBP USD, GJ, USD JPY, or gold. Just master one or two of them that have good correlation, and then you are good to go. Trade it in the section. You are good to go. Number two, the section you want to trade. The section you are trading should also determine the kind of trader you are. For example, if you are in Nigeria, you should know that the London session is favorable for the Nigerians, for Nigerian traders. Okay, your availability, check how busy you are, check your schedule. If it will allow you to be a short-term trader or a long-term trader, you should know that. And you should also consider if you want to trade forex as a full-time or part-time, so it should be part of the reasons why you should consider whether you want to be a long-term trader or a short-term trader. And number five is the psychology or emotion. How long can you hold on to a trade without freaking out? Okay, so you need to know you need to put your emotion in check. If you cannot hold trade for 2 days, 3 days, you have no point being a position trader or a swing trader. All you need to do is just a scalper or a day trader. So check your emotion, your psychology, and it will help you determine the kind of trader that you want to be or you can be. Okay, maybe in the next class I will talk about the next thing, which is long and short, bid and ask, and all of those stuff. All right, just take your time, watch the video, and I know that you will be good. All right, make sure you like, share, and subscribe. Okay, I'll see you in the next video. Okay, yeah.